Greg Schinkel, welcome to the show. It is so good to have you on She Talks Business.
I'm excited too, Lisa. I'm a long time listener, first time caller.
I know. And like I always am. I don't know. Sometimes when people tell me they listen to the show, I almost feel surprised that you listen to my show. That's so cool. Like I love that you listen to my show. And
Yeah,
I love when you text me and tell me what you liked about the
yeah.
different episodes. So thank you for that. For those of you listening, I have known Greg for a long time. Our team helps him with some of his marketing. He is a great colleague and friend, and someone that I really look up to who has a really successful business. And, this season is all about money. And I wanted to have Greg on the show because he specializes in frontline leadership and typically frontline leadership in for manufacturing companies. And I have always thought of leadership as a soft skill, whereas Greg is always talking about leadership and how it directly correlates to the bottom line. So, Greg, I have a question for you. When you are a smaller business, you own your business, how do you get people to buy in on why profit matters?
And so you're talking the employees or team members inside your
Yeah.
company? Yeah,
Yeah,
no,
everyone. Because I know you believe that it's the manager's or the owner's
yeah.
job to convey why profit is important. And so I'm going to tell you the story that I tell myself is that why would my employees care about the profit that the business makes? Because they their bonuses are tied to the results in the business, but my I would call my frontline employees are not bonus based on profit. So I just want to understand your perspective on how do you get buy-in on profit throughout the
Yeah.
organization?
Well, I'm not sure that you could ever get them really excited about profit. I do think that you can get people excited about value. And so that's if you think about value, I go way back to, the biggest piece of technology that probably lifted everyone's incomes worldwide was the advent of the tractor, because it was the first piece of, really good automation that would allow, you to get more value out of the farmland, and it freed up
Mhm.
people to go and do higher value jobs. So technically, I can't earn any more money as a frontline worker unless I add more value. Now, the value is the value is the value. That sounds weird. You look at money. Money is a construct, right? It used to be that for me toiling away, doing my job, I might raise chickens, and then I have to trade my chickens for goats and so forth. And then we invented money, which was just an exchange, because it was getting harder and harder to keep track of the cheese to goats to chicken exchange rates in real time. So
Let's
we
not
we
talk about exchange rates.
I know, I'm with you. So really, in previous years, it would be the size of my flock of goats, or how much cheese I could produce. But now I trade my time or my talents for value. And the more value I can add, the more money I can earn as an individual. Now, it doesn't mean I get an instant raise, but if I'm adding more value, my employer will consider me to be of greater value. And then in terms of either promotions or just making the business successful, one question I'd ask anybody is, would you rather work for a really successful business that makes lots of money, or would you rather work for one that's struggling and barely making ends meet? And I think it's always better to work for the more successful business.
Mhm.
Now, we're not today really going to go into this whole, like, how much more should the owner make than the average frontline staff member. In most small companies, we're not talking the same magnitude as some public companies. But even there, I just say that, yeah, okay, there's a few people at the top that make a lot of money, and quickly it falls lower and lower. It's like watching a professional golfer. The top guy gets a lot of money, and then like the ninth guy gets, still a lot, I guess, for most of us, but a lot less than the first person did. So I think that employees really just want to add value. And here's the other aspect of it, because we're looking at empowerment and accountability as well. And I think that if I know that I can see a clear line of sight between what I'm doing inside the business for customers, for the most
Mhm.
part, because whether employees love the owner or not is really somewhat irrelevant. I think it's really, do they love doing the work for the customers? So if I'm doing work for the customers and I can see a clear line of sight of the value that I'm bringing to the customer, then there's a good chance that I'm adding value to the company and the business as well. If it's obscured, because, my boss tells me just do this thing and don't worry about the rest of it, and I don't have this clear line of sight, then I toil away and I don't know whether I'm actually bringing value or not. So
You don't know if you're making a difference.
I think this confusion over whether I'm adding value or not is the one that the business owner should focus on, and be careful of things like, I don't pay you to think, I pay you to work, or just do your job, don't worry about anything else. It's like, no, I want people to be doing their job as if they owned the company, I guess, and just at least think about, if you had to sell your wares today on the work that you were doing for this customer, would the customer pay that invoice? Because in the end, we do invoice our customers, and they have to perceive that they're getting value for whatever we're charging them. So I think it's just, if you can draw a direct connection of the value that you bring, it adds more value to you. And Lisa, we're not talking just economic value, even though that's your theme. It's like human value and economic value. And I just want companies to realize it's not one or the other. It's not one of the sacrifice for the other. It's both the human value and the economic value. Because when we appreciate people, we appreciate the value that they bring us.
Yeah, that's true. So one of the things that I have noticed I have been self-employed since 2006, and I've employed people since then. So, we're going on almost 20 years. Yeah. And one of the things that I have noticed is that within my own leadership team, there seems to be a tendency to want to throw money at problems versus solve problems. And so if you are throwing money at problems, if the answer to the problem is always hiring more people, how do you get leaders to understand that sometimes that's not the right answer?
Yeah.
How do you get them to understand, I guess maybe, how do you get them to think about doing more with less? Or, you've heard Alan Weiss talk about scope creep and scope seep. And so I feel like there is a tendency for leaders to sometimes create scope seep. And I know I've heard you talk about this before, would the customer pay for that if they were watching? Yeah. So how do you get people to understand that before you throw money at problems, you really need to diagnose and understand what the problem is?
Yeah, no, that's a great question. I think most managers are trying to find the quickest path from A to B. I got a problem, that's A. I got to get to B as the solution. The easiest thing for me is to buy something. I don't know about you, but every time I see, issues in my business, I'm looking, oh, maybe this piece of technology will solve it, or this thing that we could get. And it doesn't, because it doesn't really get down to the root of the problem. So back to your question. I think that in most organizations, there's something called decision-making waste. Now, decision-making waste, of course, is where I take a higher value person, like a business owner, and I have them solving problems that should have been taken care of by someone much lower. So automatically, there's distance between the person who's going to make the decision and the amount of information available compared to the person at the front line who's dealing with the situation, can directly observe what's going on. So when managers go from higher value tasks, and remember, it's not just the salary or the earnings of the manager, it's that they're supposed to generate 10 times whatever they're paid in terms of end value. So whenever I substitute a lower value activity into their daily routine, then I'm actually taking away opportunity cost or opportunity value of them working on something more important. Does it mean you can't do a deep dive every once in a while to figure out what's going on? Of course, but then you're just doing the diagnosis and you're asking questions and you're getting people to solve problems. I do, like you mentioned, this thing about the customer sort of standing beside you every moment of the day, which is a new thing I'm kind of writing about right now. And it is an interesting way of thinking about it, because if value is just what someone would pay for something, then as we're kind of tracked throughout our day, the customer will say, I would pay for that, or I won't pay for that. And that could be on a meeting that you're involved in that you shouldn't be. Or maybe there's even a third option, not just would I pay for that or would I not pay for that? How much would I pay for that? I would pay one of Lisa's team members to solve that, but I don't know that I want to pay Lisa to solve that. So then it's like, okay, so I as the manager have to add value, and it has to be beyond just the stopgap. It has to be beyond, and when we look at spending money on something, you just want to know, either it's got to be a short-term experiment that you can tell whether it's going to work or not fairly quickly and have a way out. But when you start to commit to systems and you start to commit to team members, then it does beg the question, what is going on in that stream of functional activities that is either contributing value or sapping it? And if we're just going to add more cost, but we're not going to add more value, then really we're just harming the bottom line. And we're actually harming the customer too, because they don't really want to be burdened with waste in the process that delivers service to them.
It's tricky. It's tricky because sometimes you need to invest in order to grow. And sometimes those investments are not necessarily passed on to the customer. Sometimes you're investing for growth. And I think it's tricky because as an owner, you are deeply involved, or you should be deeply involved in the numbers in your business. And so you understand the top line, you understand the labor costs, the operational costs, and the profitability of your business. And so, what recommendations do you have in terms of getting managers and leaders to really see how what they do every day does have an impact on whether the company is successful or not? I have to tell you, years ago when COVID first hit and people, companies were going into lockdown mode and businesses were being forced to close. I didn't know how that would impact our business because we've never been through that before. And I remember people were getting laid off and losing their jobs. And I brought my team together and I told everyone, I want you to know that we have enough money in the bank to weather this storm for X number of months, even if we lost every single customer tomorrow.
Yeah.
And so I felt it was really important for me to say that to them because I didn't want people to be afraid of what was going to happen to their jobs.
Yeah.
Now, in that situation, people are happy to hear that because it's what's in it for them, right?
Yeah.
But if you flip it and, as a business owner, you're trying to generate profitability in your business because you want to build the value of your business, you want to have cash reserves, et cetera, et cetera. I feel like it's not so easy to get buy-in. So how do you get people, at least from a leadership perspective, to really understand how their decisions impact the health of the business?
Yeah. So good question. Similar to you when COVID happened. And of course, unlike you, where you had customers like me who had already committed to continue on, in marketing, although I'm sure some wanted to at least think about how to pause it or reduce it or whatever for your revenue. In our case, we're doing leadership training. So it immediately got sort of shut down. And I was also the president of the Canadian Association of Professional Speakers at the time of that shutdown. It looked like it was going to be a good year in 2020 until it wasn't. And I said to the other speakers, like I say to, I guess, anybody else who's in this business or any business, it's like, that's why you have to make money. I think sometimes business owners feel guilty about making profits. And, we use the word like obscene profits or, it's profiteering. It's like, no, you have to have profits because when we went into COVID, we had a nice cash cushion as well. And it just allowed us to, we still worried, like every business worries, like how is the revenue going to come back or not? But, if it hadn't have come back, then there would have been bigger problems, that we couldn't have handled. And that's why businesses do fail and restructure. So, but back to, I'm a fan of transparency with people. And I know at first, because even in our team, we have very good profit margins. And it's because we charge what I would consider to be a medium to premium price for what we do. But part of that, getting even the staff to have the confidence that we actually deserve to be paid more as a company for the value that we create, I had to show them that we were going to move from being transactional to transformational. And once I got them captivated on that, and then once I captivated some of the customers, people weren't really worried about the selling price. They just wanted whatever the promise was at the end of that rainbow. And, had to create confidence that actually exists. But now I find that my team isn't even questioning some of that. And I know at first when I said, here's what our target margins are. And the reason for that is I need to have enough of a cushion that if we do have an economic setback, which will happen in our business from time to time, that you guys don't have to worry about whether, we're going to weather our way through it or not. So I think it's just explaining to people. And the other thing to remind people of is, depending whether they're a freelancer or a salaried person, if you're salaried, you're going to get your paycheck until, you're terminated or laid off or something. I'm obligated for that. So we believe that as the business owner, you want to use a mix of resources, right? You want to use some flexible part-time or contract resources. You want to use full-time resources on some jobs where it makes sense. And so I just think if we just explain it to people, probably one of the biggest thing a frontline worker doesn't understand is the difference even between sales and gross profit and net profit, because they see, oh my gosh, we did $1 million in sales, and they're
And
like,
they think you
so
got all that
you got $1
money.
million, right? And it's like, most businesses, I mean, I think it's too little, but most businesses would be happy to have 10 cents of the dollar left, in net income at the end. I think it should be much higher than that, depending on the business that you're in. So I think if you keep people focused on what are we trying to do for our customers, and can we deliver on that, or how do we deliver on that even more, then I think sometimes people look down and say, well, what do I make versus what the business is making? And again, they don't really understand all
They
the
don't.
overheads that go into the business,
They
and the
don't.
fact that there's fixed costs that go on whether we sell a lot this month or we didn't. And I think all you can do is you explain it a little bit, but even then, eventually you don't even want to explain it much anymore. You just want them to focus on the value that they create. So I would say that the distraction that we need for them, but really it's focus, is like, focus on this. This is the value you bring to the customer. And just know that all these other things that happen are actually eroding the value that we're creating, both for the customer and therefore also for you.
I think you are really right, though, about people not understanding what it costs to run a business. I had a former team member of mine who I had put into a new role that we didn't really have a book of business on, but I believed we could build it. And when I put them into that role, in my mind, I thought, okay, the first year I'm going to lose money on this role. The second year, I'm probably going to come close to break even. The third year, I should be able to generate a profit. So I was looking very long term when I was making this investment. And at the end of the first year, they came to me and they asked me for a really large compensation increase. And I said, well, I can't justify doing that yet. Like, you're a cost center in the business right now. You're not a profit center in the business. And they told me that they thought that they were the most profitable member of our team, because what they were looking at is what they were being paid per hour versus what we build per hour. And they were looking at it on a siloed focus versus
Of 1 hour.
hours. How many hours do I get paid for the year? And how
Yeah.
much have I generated for the business for the year?
Yeah.
Which was very, very different. Like, they
Yeah.
definitely were making more than they were generating in the business. But that was really eye-opening to me to see that someone, and this individual had been with us a good chunk of time, to see that they actually didn't understand the economics of the business. And so, what are your thoughts on how transparent owners should be about the financial side of the business?
It's funny, Lisa. I wish I could tell you there's a good consensus, because I still think owners are worried about opening up the books. And now keep in mind that I had a business that really struggled in the mid 2000s. In fact, we were even insolvent. That's after buying the business from my dad and running it for 17 years, then ruining it, then resurrecting it, then eventually. So I say out of 31 years, I only learned how to make any money in the last 10 or so. The rest was an education of some kind, trading dollars. So I think you did what you just did, which is you can explain things and go, I know that, one of the things you might look at is you make 50 and we charge 150 an hour, let's say. And you're just looking at it as an hour, but you know that we don't sell 2,000 of those hours at 150, which if we did, then that would literally be, you'd bring in 150 times 2,000 hours. That's 300,000 a year. But if we're only selling like 500 of those hours times 150, that's $7,500. and you're getting paid $50 an hour times 2,000 hours or however many hours you're
Right.
working. Technically, it's minus 25,000. So I just wanted you to be aware of that. But absolutely, if we can stay on the plan and we can get the yield up on those hours and we can sell more of them, absolutely, I'd be open to having a conversation with you about all that extra value that you're bringing to the business. But keeping in mind that first year, if we're going to do minus 25 or minus 40,000, I have to recoup that. It's not like, hey, just forget about that 40,000 I sunk in the first year. So, and the funny thing, Lisa, I wish every employee could hear what I remember hearing at a family business conference I attended. I think it was in Saskatoon. And we were just sitting around having a cocktail or at the end of a day of meetings. And I said, has anyone else had this struggle where they've had to actually add money to their account to cover their payroll? And I swear to a person, and these were businesses that were much larger than mine at the time, and everyone had this issue, this sweat about, oh my God, the payroll's coming out. We haven't got paid from that one customer.
Yeah.
And like the owner's dumping in 100 grand or 500,000 to cover the payroll until that customer payment comes in. People have no idea the kind of stress that an owner has. And I certainly went through it when our business was suffering, a number of years ago, almost 20 years ago now. It's funny though that the pain never leaves you as an owner. So
No.
once you know that you've had those times when it's been really, really lean, like leaner than it should be, that's why I think that hardens you a bit as a leader. But your staff can't see inside your brain to see what your rationalization is unless you describe it to them. So I believe we should be transparent.
Mhm.
In the end, a person's going to go back to whatever they mostly focus on. And that's why, in manufacturing, we say, if we don't describe what winning looks like, then people will substitute activity for winning. And
Mhm.
activity is, I did my 8 and I'm hitting the gate. Well,
Mhm.
yay. So you did your 8 hours of labor and that's a win for you. It's like, what did you do to actually, either add value to the customer or add value in the process? And just reminding people again of how they add value.
Mhm.
So I'd say,
Yeah.
I'd rather err on the side of sharing more, knowing though that some people, will process it differently than our intention when we share it.
Mhm. Yeah. I know that I had to, um, one of the things I had to do inside of my business is create a formalized process for budgetary approvals,
Uh,
because there were some miscommunications that occurred where someone thought that I approved something and I thought I approved something for a short period of time and they thought I approved it indefinitely. And so now, we have a process in place where every single, budgetary approval needs to be documented, and I need to
oh,
approve it in writing.
bureaucracy.
Well, it's
I
not
know.
even that, it's not even that difficult. It's just more of a formalized email
Yeah,
that says, I
check
need you
on
to
it. Yeah,
approve this, because that way you don't end up in a situation a year later where somebody's saying, well, I thought that you wanted me to do this. And
right.
so it just helps you, for me, I feel like it's helping me to get my managers, my leaders to
Yeah.
understand that there's not a never ending supply of money that we throw at things. That sometimes, if you lose a team member and you need to, invest in having somebody work some overtime, or you need to have an independent contractor work some additional hours, things like that, it's important to document what it is that you're actually approving and doing so it doesn't get out of control.
Yeah, I mean, I had a business owner who was both a client and a colleague, uh, and he made it so that he had to sign. Now, back in those days, more things were signed by check, and these days it's more e-transfer, which technically takes away an element of the controls in the business, because as long as the person's authorized, they can go ahead and just pay things, or they get paid
Mm-hmm.
automatically. And partly that's why companies have subscriptions, so that you don't think about it until 17 months after you've stopped using it, that maybe you should cancel it. So
Mm-hmm.
I do think that having a series of controls. I was kind of joking about the bureaucracy, but it is something to be aware of, because sometimes, again, we have a problem and then we put our solution in place, and then we don't know that solution does take somebody, I don't know, 12 minutes, but they do it 50 times a year. And then it's just, again, as the business owner, just like you want your people to think in numbers, what is the compliance to this system? Is there a different way of doing it that
Mm-hmm.
doesn't cost as much? because I've seen companies, they start up these processes and systems, they don't ever go back. Like everyone wants to start a new system, nobody ever wants to stop a system. But everything you do in your business is costing you money one way or the other. Somebody's spending some minutes on it, you're spending time on it. That time is not being spent doing something else. So you just want to say, I want to achieve this functional outcome, which is to have a handle on costs. And even just adding the little discipline that says, okay, how much does this cost either per month or fixed cost? What's the commitment? Do we really want to commit to a year and pay because it's a 10% savings? Maybe we should just run this thing for 3 months at the monthly rate, even though it's 25% more. And then we can always make a decision. Lately, what I've said to my team, because we'll choose different platforms, I said, remember, every platform we choose serves us to some degree at the current level that we're at. But I want you to imagine that we were 3 times bigger, 5 times bigger, or 10 times bigger. What is the chance that that's the platform we're going to be heavily invested in, if we are a $25 million business? Probably not. So even as you make decisions as to what we're going to migrate to a new platform or to a system, know that we have to have an exit strategy from that platform, because we're going to migrate to something else at some point. Because it's like saying, I'm all in on MySpace, and you know what? I don't care what comes after that. We're going to keep directing people to MySpace. It's like, no. Just like what your team does with us. There's different platforms that ebb and they flow. And just because you committed to one doesn't mean you should stay committed to it forever. But you have to kind of get your staff to think about that, because otherwise they're thinking, why wouldn't we sign up for 5 years and pay up front and get this, 40% savings? Well, cash has value. And I don't really want to capture that. But unless you teach people that, they don't know.
So I'm curious, Greg, this is a completely different question for you, but you have been running a business for
31 years,
3 decades now. And so what is your philosophy on how many months worth of operating cash flow should someone have in the bank? And how should owners make decisions around when to take profit off the table?
Well, those are expensive lessons that I've learned in my 3 decades, because at first I thought everything has to go all in on the business all the time, like reinvest constantly. And I have clients who are in what I would call a capital intensive business, right? Where they have to buy the next machine for 300,000 or $500,000 or $1 million. And like I was walking through a machining plant the other day. So they have these CNC machines. They basically turn metal into parts. And I said, well, what's that machine cost? He goes, well, that one was $750,000. And I go, well, how many hours, like what's an hour worth on that machine? He goes, well, we charge $100 an hour. So I go, if that thing is only working day shift, 2,000 hours is roughly a day shift so that means it brings in 200,000 in sales, but that doesn't count for the fact that $100 isn't pure profit, right? And I'm thinking, I said, how many of those machines are in this geographic area? Oh, he says, not very many. This is one of the few. I said, then why aren't you charging $250 an hour on that? But so I go to, our business is not capital intensive. Most of our assets are intellectual property. It's people. So therefore, the margins are actually, I guess, higher on that, but we don't have to plow it back in. So I think as a business owner, first of all, I believe that most business owners don't set it up right from the beginning to make a profit. They look at it and say, well, I used to have a job and it paid me $70,000 a year, so therefore I'm going to charge $35 an hour because that's 70,000. And it's like, but no, figure this, you're going to have these other people. You need to, so that after you pay all your bills, and if you're in a business that you can differentiate, you should be aiming to make not 10% net income at the end of the day, but 20 or 30% net income, not gross, right? And so that means that whatever you're charging, you've got to mark up the people, whatever it is, 2.5 times probably what you're paying them, just to kind of create the extra space so that you can create the margins that you need, knowing that that's going to vary. And then here's my thinking is that wherever possible, unless the money is needed in the business, take it out of the business. You can still put it in another holding company. I'm not suggesting we all go out and buy, the most expensive things with our money. Like, we got to keep these cushions, but keep it out of there's a whole strategy that says don't keep too much cash like in the business. At least move it out to a holding company or something, because you don't want your operating company to have a lot of retained earnings in it normally, because that, if something bad happens, you can be sued, and all those earnings are now subject to some sort of settlement. I would just like move the profits out, take it out for you personally, make sure that you're hitting your own personal financial plans in terms of retirement. When you have a great year, because we all get these little bubble years where we just make more than we were expecting, yeah, sure, indulge in something, but also top up your savings, because there's going to be a lean year where you're not going to make those retirement contributions and that sort of thing. So my sense is that you don't want all your eggs in one basket. It's the same way as if an employee in the quote olden days, they worked at General Motors or General Electric or one of these companies, and all their savings were in GE stock or GM stock. It's like not a great idea. Your salary is tied to that company. Like, so yes, by all means, take the incentive to add to the company owned stock. But as soon as you can, you should be selling some of that and diversifying it into something else. So business owners need to think of a portfolio. It can't be all in your business all the time, because you're a person who also has to save for yourself and create a lifestyle. And anyway, this is a pet thing of mine. I think owners don't reward themselves enough, and I don't mean like with luxury goods.
Right.
I just mean like give yourself a cushion so that you're not sweating. A major stress for most business owners is a stress over cash flow.
Right.
And if you can get that monkey off your back, then life is a lot more calm when you don't worry about whether the customer payment came in or not. And you're not sweating and getting angry because, a staffer didn't get an invoice out, within a week. You've got a cushion, like just create some cushiony comfort for yourself as a business owner.
I've always been a bit of a cash flow pig since and when I opened my first business, the TELUS dealership, I didn't understand cash flow. And so I was constantly in my credit line until the next pay. And then I was out of my credit, not pay, but until TELUS paid us like our commissions on everything that we sold. And then I'd be out of my credit line. And then, within a week or so, I'd be back in the credit line. And so it was always in and out, in and out, in and out. I couldn't get ahead. And then I learned how to manage cash flow. And from that time, I've been really good at managing cash flow. But I learned a lesson recently when I was listening to, her name is Christina, and she owns Farm Girl Flowers in the United States. And she wrote this blog after the Silicon Valley Bank thing happened, where all of the bank accounts got frozen and people couldn't access their money. And she said one of the lessons that she learned is, one, don't have more than $250,000 in any bank account because you're not insured over that. But two, take money off the table when you can. She's like, because as an owner, if I had taken more money off the table when the bank accounts got frozen, I would have had liquidity to actually do something in my business. But because I was keeping all of my money in the business, I was pretty much handcuffed until the situation was resolved. And so I thought that was really, really smart advice. And so I'm trying to figure out for myself, what's the magic number? What is the number that I want to, like, what is the magic number? Like, should I have 2 months, 3 months, 6 months, a year? Like, how much operating cash flow should I keep? And I have this conversation with my husband all the time. I'm like, all right, so if we make this much in profit this year and we have this much in the bank, how much should I take off the table? And then I never really do it. It's
No, I actually, you're raising a very good question that I don't think I've even come to terms with myself, because we do have I would say, a complicated structure of companies. And, so there is this company that has this pot of cash, but of course it serves two purposes. Really, its primary purpose is to accumulate savings for retirement eventually. Right. That's its primary purpose. And so instead of RSPs, which most people would use to save for retirement, this gives maximum flexibility. But it also is a pot of capital that if we needed to, we could tap into to fund the operating company if we needed to. So I don't think I've even I just know that there's a lot there, so that if there was a calamity, but I'd be actually drawing down my retirement savings if I had to, say, loan back a few $100,000 into the operating company. So I don't really sweat it. I will say this, just on your point about line of credit, is that there's some businesses that really shouldn't have any credit. I mean, and ours is actually one of them, even though we would qualify, because, they always say when you don't need the money is when you borrow it. But, it costs money to keep these credit lines in place. And it always begs the question, like, I understand if you're a garden center and you need to lay out all this money for your mulch and your
Right.
flowers and
Inventory.
everything before you sell it, you need a credit line because it's going to be hard unless you just are great about saving lots of money. But if you're in a business that has sort of regular flows, why would it need a line of credit? That just says that it's not capitalized properly.
Mm-hmm.
So and of course I was in the mode before where I had a line of credit and credit cards, and it still wasn't all working out. And I was using Visa to pay MasterCard back in the day. It was just horrendous. The funny thing is when it was happening, I knew it was kind of off, but I still did it because I didn't have any other choice, and I wasn't even aware of how bad it was until it came to a head. And then since then, I'm like, no way. I don't want to borrow any money. Or if I'm going to borrow money, I'm going to borrow it from myself. Right. So
yeah. And when you borrow it from yourself, I feel like when you have all that money sitting there, it's easier to make the decision to spend it because you have a surplus in your business operating account. Whereas if you don't have the surplus in your business operating account and you do have to borrow it from yourself, you're a little bit more intentional around whether or not you want to invest that money, right? Like, I'm not sure.
You're raising a good point, which is that, and I know you've brought it up already on episodes within this series. It's like, don't assume that just, and I do this even in my business, which is getting bigger. I'm still very susceptible to how much cash is in the account. And to some degree, how much receivables are coming in and versus the payables. Because then I go, okay, it looks like there's going to be an extra 75,000 or 100,000 or whatever it is. And then, I'm like everybody else. I got money and wants to burn a hole in my pocket. So then, maybe I'll get a nicer car when my lease renews or something like that. It's like, no, in the end, there's a saying, of course, in retirement savings that says pay yourself first, which is make those transfers out of that operating account so that it doesn't look like, oh my gosh, look how rich you are right now.
Yeah.
You are rich right now. And if that stays like that and gets bigger, you have some extra money to play with, but like, get that out to some other account that you don't look and stare at every day.
Agreed.
So I know when it goes into their holding company, that's not really there to be spent. I mean, we can draw it out when we need to, but it's really be drawn out later in life. And so I don't look at the holding company, which I could, and go, oh my gosh, look at all the money there. It's like, no. Operating company, try to keep it a little bit lean. If there's surplus, move it out of there, some other entity, so that you're not sort of like staring at that money going, ooh, what could I buy with that?
Yeah. I mean, it's a good problem to have, right?
To answer your question, I do think it's 3 to 6 months. It's hard to say exactly how long it should be because, some organizations keep a year's worth of expenses. And wow, that's really bleak if you're going to keep a year's worth of expenses. How long, if you've been in business for a while, that there's going to be business interruptions of somewhere between 3 months and 6 months. COVID was a good example. Can you live with 90 days of very disrupted cash flows?
Right.
Not because your customers are all going bankrupt, by the way. It could just be that their accounts payable and receivable people aren't there. Like, just try to get paid over Christmas. It's like impossible. So it's like, just make sure you've got enough of a cushion that you aren't sweating when that check is a week overdue. Like, make it so that, if the customer takes me 5 weeks to pay me, I'm still cool. I've got it.
Yeah. I like to think in terms of, having a flat rate amount available. And as long as I don't go below that number, it's safe to take stuff off the top. My problem has been that I keep raising that flat rate number and not taking it off the top, which is, something I need to start doing. And I'm like you, and I'm careful with money in the business. I pay myself in the business. So I look at my profit after my salary. I don't look at my profit before.
Good. We should talk about that for a moment because we looked at buying another company similar to ours, and on the face value, he was doing well. He was doing about 1.7 million, and his profit was about 350. So he's making 20% net, which on the face of it, I go, wow, that's good. That's kind of what we're doing. We try to get a little bit more than that. But then I determined that he wasn't taking his salary. That was his salary. Now, you might say, Greg, come on, he's still making 300 grand a year. I go, yeah, but he's got a business to run. And if he didn't want to run it, you have to pay somebody else a salary, which is why when you value the business, you have to add back something for someone to
Right.
manage it, whether it's you or not. It's called normalized earnings,
Mm-hmm.
right? So what is a reasonable salary that you pay someone to do the job that you do? If you make more than that, that's fine. That's the owner's sort of prerogative to take out their pay package however they wish. But this person was not taking that out. And so I immediately knew that we were twice as profitable as him on slightly higher sales than that. Because yeah, I know that we take a salary and bonuses, and then we take dividends. So it's just, what is the margin? So,
Right.
but it's funny because, I said you've got a successful business here, but you're not marking this up, you're not marking that up. I gave him some tips so that he could increase his profit so that he can come and sell it to me for more money down the road. But, in the end, it's just like, do yourself a favor,
Mm-hmm.
anyway. I just think that without knowing that he should have had the net that he had plus an equal amount that he paid himself on top of that.
Exactly.
And then it's like, oh, but this is just the chronic challenge of a business owner. You're going, oh, well, yeah, but I made 300,000. Yeah, but you didn't pay yourself anything.
Right.
Yeah, I know you'll take
Exactly.
it out as a dividend maybe at the end, but it's like the dividend is for being the owner. The salary is for being the
The employee.
manager.
Yeah.
Yeah.
You are an employee in your business. And I talk to team members, or not team members. I talk to clients about that all the time, because if you need a loan from the bank and you don't pay yourself T4 or W2 income, you're not getting any money from the bank. Because if you're hedging your income on how your business does by the end of the year, then it's a risk, right? You're not
Yeah.
demonstrating that you can manage that cash flow and salary on a regular basis. So it's
Now,
definitely a risky
yeah,
thing.
I would agree that it really, you should be being paid from your business. Now, I mean, if your business is fabulously great and you don't need, T4 W2 income, then fine. Okay, you're just going to make it on dividends. But
Right.
my guess is there'll be a track record of financial performance that the bank would look at and say, okay, yeah, the business can support the earnings. It's fabulously
They're pretty
profitable.
sticky though. If
Yeah.
you don't have
It doesn't fit into their box, right?
it
Their
doesn't
box
fit into
is
their
show me
box.
your salary, but then they make us check that box that says you're self-employed anyway, which means they're very suspicious that your pay package is
Yeah.
stable.
Yeah, I ran into this actually a couple of years ago, because when we bought our home in Calgary, we hadn't sold our home in Nova Scotia yet. So we needed a
Yeah,
small mortgage, Greg, not even a big
yeah,
mortgage, to buy the property that we bought in Calgary.
yeah.
And at the time, I think I was only paying myself, I don't know, 75,000 a year. And,
Mm-hmm,
I was paying, I think my husband was taking 50,000 a year.
mm-hmm,
And like
mm-hmm.
we had more than enough money because we could take
Yeah,
money out of the business we
yeah,
wanted. But because our T4 income
yeah,
was the way that it was, the process was a lot harder. And so I learned a lesson from that, you need to give yourself reasonable T4 income just from a
yeah.
credit perspective if you want to do things like that. So,
Well,
anyways,
I wanted to say that this series is good just to get people thinking. I know we're throwing around a lot of things here, like how much should you be making? I mean, in the end, the business can't pay you more than it's generating, in terms of income. And lately, I've been a huge proponent of I have to elevate myself to higher value activities.
mhm,
And so even the work that you're helping us with in terms of our strategic marketing, as we move from being transactional to transformational, it means that my value is going to be much higher if I'm focused on higher level relationships and higher level outcomes. And then the
mhm.
team is really where I want to push everything down to the lowest possible uh, and I say cost. I think business owners, we don't want to delegate, and we like meddling when we shouldn't. But really, we need to empower our people at the front
Yeah.
lines to add as much value as possible. And so we only have to be involved in things that add extra value,
Mhm.
and maybe a little bit on monitoring to see how it's going. So I know we always pride ourselves. I'm willing to get my hands dirty. I'm willing to do something. I'm not asking my team to do anything I wouldn't do. And I absolutely, if I need to, I can ship a UPS. I can actually go
Right.
on there and I can create the shipping labels and take it over there. It's not the best use of my time. I used to love doing bank deposits because I always think it's great when this check comes in for $80,000 and I want to run it over to the bank because it makes me feel good. But really, as long as it gets in the account, I can
Yeah.
look at it on the screen and feel good. But I just think we get ourselves embroiled in a lot of things. We never even think about what is the value of this activity.
Yeah.
And then if you go, but if I didn't do that, I wouldn't do anything. Great. take time off. Guess what? Your time is very valuable just to have no time to do it.
Yeah,
Like,
to
so
think.
if everything is being done and you're not doing anything, stop deciding my boredom means I'm going to go interfere with the work of other people. Find something higher value to do, or just enjoy your time off.
Yes.
Recharge.
Yes. Yes. Great advice to end on. Greg, thank you so much for your time today. This has been a great conversation. I'm sure our listeners took away tremendous value, lots of really, really, really good nuggets. So I really appreciate you being here with me.
Good, Lisa. And if people feel agitated listening to this, just know that the agitation is just your brain coming to terms with the fact that there may be some truths in there that will help you feel better. You don't have to suffer as a business owner. You should thrive as a business owner. Just keep focusing on that. It's not,
Yes,
there's no martyrdom in small business ownership. There's just a
absolutely.
pathway to success.
Absolutely. And if you go to my website in the show notes, you'll find all of the links to Greg's website. While many of our listeners may not be Greg's quote ideal client, you will find a lot of value in the leadership material that Greg produces on a regular basis. So you can go to uniquedevelopment.com, and I will put a link in the show notes where you can also download one of Greg's books for free. And you'll find that Greg produces a leader feeder on a regular basis with tons of great content. So if you want to learn how to be a better leader yourself, his website is a great place to start. Thanks a lot, Greg, for being here. And
Thanks, Lisa.
thanks for listening.